6:04 a.m., June 28, 2026. Chicago, Illinois. 31 federal vehicles moved through the pre-dawn streets of the West Loop in a coordinated column, headlights off, engines barely audible above the early morning traffic on Randolph Street. Total estimated proceeds laundered, $71 million. 8 nonprofit organizations, 5 states, one accounting firm at the center of all of it. The convoy split at the intersection of South Halsted and West Monroe. 12 vehicles peeled east toward a glass-fronted office building on South Wacker Drive. 11 more turned north toward a currency exchange on West Chicago Avenue. The remaining 8 headed to a residential address in Oak Park, a house registered to a 501c3, calling itself the Gulf Reconstruction Heritage Foundation. The simultaneous execution had been planned down to the minute. Any gap between entries, any window longer than 4 minutes, and the network could move funds, wipe servers, or alert contacts overseas. OFAC and FBI had spent 11 weeks making sure that window would never open. This is Operation Stonebridge. The operation began not with a tip, not with a surveillance camera, not with an informant. It began with a footnote. In the second week of April 2026, an OFAC licensing analyst named Rachel Shen was processing a batch of newly unblocked Iranian financial channel applications, routine paperwork that had accumulated during the extended ceasefire negotiations. The U.S.-Iran Framework Agreement had been initialed in late March. The naval blockade on Iranian commercial ports was not yet officially lifted, but the regulatory machinery had already begun to move. Dozens of organizations were pre-filing applications to conduct permitted financial transactions with newly authorized Iranian counterparts. Shen was on her third consecutive hour of cross-referencing compliance officer documentation when she noticed a name repeated across 3 separate applications filed by 3 separate organizations. The compliance officer listed for the Persian Cultural Relief Cooperative, the Gulf Humanitarian Bridge Fund, and the Bayan Reconstruction Alliance was a Chicago-based accounting firm called Meridian Financial Compliance Group. Meridian was not a large firm. Its website listed 4 partners and a downtown Chicago address. Its client base, according to its own marketing materials, focused on small and mid-sized nonprofits in the Midwest. Shen flagged the name and ran it through Treasury's internal cross-reference system. The result came back in under 30 seconds. Meridian Financial Compliance Group had appeared in a 2019 Treasury advisory, not as a sanctioned entity, not as a confirmed front, but as a named associate of a network of Iranian financial intermediaries identified and partially dismantled between 2017 and 2019. The advisory had called Meridian a potentially associated entity, language careful enough to avoid triggering legal action but specific enough to keep the name in the system. 7 years later, the same firm was handling compliance for 3 organizations, simultaneously applying for licenses to conduct transactions in newly opened Iranian financial corridors. Shen flagged it to her supervisor. Her supervisor escalated it to the OFAC Office of Global Targeting. By the end of that business day, the flag had landed on the desk of the joint OFAC, FBI Financial Crimes Task Force operating out of Chicago's Dirksen Federal Building. What the task force found in the first 72 hours suggested the problem was larger than 3 organizations. A financial analyst working through Treasury's nonprofit disclosure database identified 8 organizations with overlapping characteristics, all registered as 501c3 entities, all incorporated between January and March 2026, all listing mailing addresses in Illinois, Texas, Florida, Virginia, or Michigan, and all either filing or preparing to file OFAC license applications. 6 of the 8 listed Meridian as their compliance officer. 2 listed a second firm, Argent Advisory Services, with a Schaumburg, Illinois address. When the analyst pulled the corporate registration documents for Argent, she found that one of its listed partners had previously worked at Meridian. The 8 organizations operated under names evoking Persian cultural identity and Gulf region humanitarian work. Beyond the Persian Cultural Relief Cooperative, the Gulf Humanitarian Bridge Fund, and the Bayan Reconstruction Alliance, the network included the Caspian Heritage Educational Trust, the Hormuz Reconstruction Initiative, the Farsi Cultural Outreach Foundation, the Eastern Mediterranean Relief Collective, and a newer entity called the New Horizon Diaspora Foundation. Combined, these 8 organizations had raised $71 million between April 2026 and mid-June 2026, 11 weeks. The fundraising had been aggressive and sophisticated. The organizations ran coordinated social media campaigns across Persian language and Arabic language platforms, targeting diaspora communities in the major metropolitan areas where they were incorporated. They solicited corporate ESG pledge donations by positioning themselves as conduits for verifiable humanitarian work in the post-ceasefire reconstruction environment. And they had applied for, and in 2 cases already received, federal pass-through grants routed through community development funding channels that did not require the same vetting level as direct Treasury disbursements. The pitch to donors was straightforward. The ceasefire created a rare window for legitimate reconstruction investment. Persian diaspora communities had been waiting for years to contribute to rebuilding efforts in their countries of origin, and these organizations offered a legal and transparent vehicle to do so. Tens of thousands of individual donors, many of them Iranian-Americans with family connections in the region, gave money in good faith. What they did not know was where the money went after it arrived. I spent time going through the financial map that OFAC and FBI reconstructed during those 11 weeks. One detail kept appearing in the transaction records, a detail that shouldn't have been there. Every dollar that entered these 8 organizations followed the same routing path, regardless of which organization received it, regardless of which state the donor was in, regardless of the donation method. Every dollar went to Chicago first. Specifically, every dollar was routed through a currency exchange network operating under the name Windy City Financial Exchange, with branches on West Chicago Avenue, on South Michigan Avenue, and in a strip mall in the Chicago suburb of Berwyn. Windy City Financial Exchange was a licensed money services business registered with FinCEN. It had been operating since 2014 with no prior enforcement actions. Its stated business was currency exchange and international wire services for immigrant communities, a legitimate business model in a heavily regulated space. In practice, between April and June 2026, Windy City Financial Exchange processed over $68 million in transactions originating from the 8 nonprofit organizations. The exchanges converted dollars into euros and Turkish lira. The converted funds were then wired to accounts held by commercial entities in Istanbul and Dubai. The Istanbul recipient was a trading company called Karadeniz Import-Export Limited, incorporated in Turkey in 2023. The Dubai recipient was a logistics firm called Crescent Gulf Trade Services, incorporated in the UAE in 2022. Neither entity appeared on any U.S. sanctions list. Neither had any public-facing connection to Iranian state entities. Treasury's analysis, cross-referenced with intelligence from partner agencies, identified both as commercial structures with documented financial ties to entities controlled by or operating on behalf of the Islamic Revolutionary Guard Corps. The mechanism was clean. The organizational layer, 8 American nonprofits raising money through legitimate appearing campaigns, created distance from the source. The compliance infrastructure. Meridian and Argent, providing paperwork that met the minimum threshold for OFAC applications, created the appearance of regulatory diligence. The conversion and wire structure, going through a licensed money services business, meant the transactions cleared standard banking compliance filters. And the end recipients, 2 commercial firms in NATO-adjacent jurisdictions with no direct sanctions exposure, received funds that looked, on paper, like ordinary international business payments. Here's what this tells us about the post-ceasefire environment. The network operators understood something specific about regulatory transition moments. When a major sanctions framework shifts, when the rules change, when new entities are being licensed, when compliance officers across the government are managing a surge in applications, the signal-to-noise ratio for anomalies drops. The OFAC team reviewing applications in April 2026 was handling 5 times its normal volume. That one analyst noticed the Meridian footnote at all was, by most accounts within the task force, closer to luck than system. The task force could not rely on luck again. They began building the full financial map on April 15, 2026. They would not execute search warrants until June 28, 11 weeks. 602 separate financial transactions traced and documented. 34 bank accounts identified across 7 financial institutions, and a name that surfaced in week 3 of the investigation that changed the scope of everything. His name was Daniel Harwick. He was 44 years old. He had worked for the State Department for 11 years, leaving in 2022. His final role had been as a compliance review officer in the Bureau of Economic and Business Affairs, a position that gave him detailed familiarity with OFAC licensing procedures, application review workflows, and the specific screening criteria that Treasury analysts use to flag potentially problematic applications. After leaving state, Harwick had established himself as a consultant, helping nonprofit organizations navigate federal grant applications and international financial compliance. His firm was called DC Policy Navigation Group, with an address in Arlington, Virginia. Harwick had been hired by 4 of the 8 organizations in the Stonebridge network. His engagement letters, recovered later in the investigation, described his services as regulatory strategy and federal application support. His fee for each engagement was $175,000. The task force's working hypothesis, developed through weeks of financial analysis and corroborated by communications intercepts authorized under a federal court order, was that Harwick had provided something more specific than general regulatory advice. He had identified the precise gaps in OFAC screening protocols that the network was exploiting. Gaps that existed specifically in the context of the ceasefire transition, gaps that a former State Department compliance officer would understand with a level of granularity no outside consultant could replicate. The scheme worked in part because someone who had helped design the screening system knew exactly where it didn't look. The discovery of Harwick's involvement triggered an immediate recalibration of the investigation's timeline. The task force had originally estimated that the network would begin its final transfer phase, moving accumulated funds out of U.S. accessible accounts and into the overseas structures. In mid-July, after the blockade lifting was formally announced and the volume of legitimate international financial transactions surged further, that estimate now appeared too conservative. On June 18th, a financial analyst monitoring the Windy City Financial Exchange accounts detected an acceleration in transaction volume. The exchange had processed an average of $4, $2 million per week since the investigation began. In the week ending June 18th, it processed $11, $3 million. In the partial week ending June 24th, it processed $8, $7 million. The network was not waiting for mid-July. It was moving funds now. The task force requested an emergency operational timeline compression from the U.S. Attorney's Office for the Northern District of Illinois. The request was approved. Search warrant applications were drafted, reviewed, and signed in under 96 hours. The target date for simultaneous execution was set for June 28, 2026, less than 72 hours after the formal blockade lifting announcement. The timing was deliberate on both sides. The network operators had calculated that the post-announcement regulatory environment would create maximum noise. Every compliance officer in the financial system would be managing a surge of newly permitted transactions, and a few $100 million moving through established channels would be functionally invisible. What they had not calculated was that the task force had been watching them move money for 11 weeks and had already mapped every account, every exchange relationship, every wire destination. The network was running toward a door that had already been locked from the other side. Put yourself in the position of the surveillance team in those final 72 hours. They are watching $20 million move in 9 days. They know the warrants are coming. They cannot move before the warrants are signed. Every wire that clears is money that will be harder to recover. The rule is, you watch, you document, you wait for the signal. 3 obstacles complicated execution planning in the final week before the raid. The first was a structural problem with the Oak Park residential address, the building registered to the Gulf Humanitarian Bridge Fund. When the FBI's technical team attempted to access archived floor plans through the county assessor's office, they discovered that the building had undergone a significant interior renovation in 2024 that was never reflected in the permit records. The actual internal layout was unknown going in. The entry team adjusted its approach. They would enter with a secondary sweep team following the initial clearing unit, adding approximately 4 minutes to the containment timeline for that location. The second obstacle arrived 36 hours before execution. The task force's confidential human source. An individual with peripheral knowledge of the network's financial operations who had been providing information since week 5 of the investigation went unreachable. Phone disconnected. Last known location unknown. The source had provided valuable, but not operationally critical information. The task force assessed that the investigation could proceed without them. Whether the source had been tipped off, had voluntarily withdrawn, or had simply panicked in the final days before the raid was a question that remained open at the time of execution. The third complication was weather. A severe storm system moved through the Chicago metropolitan area on the evening of June 27th, dropping 4 inches of rain and flooding several arterial roads on the northwest side. 2 of the planned vehicle staging areas became unusable. The logistics team spent 6 hours the night before the raid identifying and pre-positioning alternate staging routes. At 5:58 a.m. on June 28th, all entry teams reported ready at their staging positions. The operational window was set for 6:04 a.m. The entry at the South Wacker Drive office building lasted 11 minutes. The space, 2 floors of a shared office complex used by the Hormuz Reconstruction Initiative, the Eastern Mediterranean Relief Collective, and the Caspian Heritage Educational Trust, was occupied by 2 early arriving administrative staff who were detained, identified, and removed from the premises without incident. Agents seized 4 server racks, 12 laptops, 6 external hard drives, and 3 filing cabinets of physical documentation. A secondary team simultaneously executed a court-authorized data preservation order at the building's network infrastructure company, freezing cloud-based backup systems before they could be remotely wiped. The entry at the Windy City Financial Exchange's West Chicago Avenue location was more complicated. The exchange did not open until 8 a.m. The building had a security system with a 30-second delay alarm response. The entry team breached the front entrance at 6:04 a.m., secured the interior in under 3 minutes, and was in control of the building before the alarm company's call center could complete its verification callback. Inside, agents found the exchange's primary server infrastructure, a transaction logging system containing records of 602 individual wire transfers processed since April 2026, and in a back office locked with a keypad, approximately $840,000 in mixed currency that had not yet been processed through the exchange's formal records. The $840,000 was unlogged. That meant it had arrived after the exchange's last formal transaction record, within the previous 12 hours. Someone had delivered nearly $1 million in cash to a currency exchange at some point between the previous afternoon and the moment federal agents walked through the door. The delivery was not on any surveillance system agents could access on site. The identity of who brought it, and on whose behalf, would become one of several threads the investigation was still pulling 6 weeks later. The Oak Park residence yielded what the task force later described as the operational nerve center of the network's domestic logistics. The house, a 4-bedroom property registered to the Gulf Humanitarian Bridge Fund as a program operations facility, contained a dedicated communications room on the 2nd floor with encrypted messaging equipment, a document shredder that had been used within the previous 24 hours based on the volume of material in its waste bin, and a personal laptop registered to an individual, the task force had not previously identified. The laptop belonged to a woman named Parisa Nakai, 41, a financial consultant with dual Iranian and Canadian citizenship who had entered the United States on a business visa in February 2026. Her name did not appear in any of the network's public-facing documentation. It did not appear in any of the corporate registration documents. She was not listed as an officer, director, or employee of any of the 8 organizations. Her laptop contained what amounted to the network's operational ledger. The document, a single encrypted file that FBI technical analysts unlocked within 18 hours of seizure, contained a transaction map cross-referencing all 8 organizations, their donor intake channels, their Windy City Financial Exchange transaction schedules, and the downstream wire instructions for the Istanbul and Dubai accounts. It contained internal communications referencing Harwick by the pseudonym The Navigator. It contained a projected schedule of final transfers, a timeline that had been accelerating in the 2 weeks before the raid, consistent with the transaction surge the financial monitoring team had detected. It also contained a name the task force had not encountered before. A reference to an individual identified only as the Bridge described in internal communications as the contact responsible for coordinating receipt of funds at the Istanbul end. The communication suggested the Bridge was a dual citizen individual with residency in Turkey who served as the interface between Karadeniz Import-Export Limited and the downstream IRGC-affiliated recipients. The Bridge was not in the United States on June 28, 2026. 6 individuals were arrested in the coordinated morning operation. Parisa Nakai was taken into custody at the Oak Park residence. The 3 principals of Meridian Financial Compliance Group were arrested at their respective home addresses in the Chicago area. A senior officer of Windy City Financial Exchange was arrested at his home in Naperville. And Daniel Harwick was arrested at Washington Dulles International Airport at 6:47 a.m., 43 minutes after the Chicago entries began, as he attempted to board a flight to Frankfurt with a connecting itinerary to Istanbul. Harwick's carry-on baggage contained 2 passports, 1 U.S. and 1 Canadian. His checked baggage contained a laptop with communications that the task force later described as providing direct and detailed corroboration of the scheme's architecture. He said nothing during his arrest. According to the arresting agents, he looked out the window of the airport gate area for a long moment after being handcuffed, then asked to speak to an attorney. Unpopular opinion. Daniel Harwick represents a failure that has nothing to do with individual ethics and everything to do with how the U.S. government manages security clearance offboarding. Harwick didn't use classified information. He used institutional knowledge, the kind of detailed, granular understanding of process gaps and workflow thresholds that you accumulate after 11 years of doing a job. There is no classification level for that. There is no non-disclosure agreement that covers the mental model of how a review process works. And there is no cooling-off restriction that stops a former compliance officer from selling his understanding of a screening system to someone who wants to circumvent it. The question isn't whether Harwick should have known better. He absolutely should have. The question is whether the system that produced him has any mechanism to prevent the next one. What do you think? Was Harwick's sentence, whatever it turns out to be, adequate for what he actually sold? Not classified documents, not state secrets, just the knowledge of where the system doesn't look. Comment below. By 10 a.m. on June 28th, all 6 primary targets were in federal custody. 34 bank accounts across 7 financial institutions had been frozen through emergency court orders executed simultaneously with the search warrants. The accounts collectively held approximately $14, $2 million at the time of the freeze. The portion of the $71 million that had not yet been converted and wired overseas. The remaining $56, $8 million had already moved. Most of it had cleared the Windy City Financial Exchange network and arrived in the Istanbul and Dubai accounts. Federal authorities initiated asset recovery proceedings through the Justice Department's Kleptocracy Asset Recovery Initiative and filed mutual legal assistance requests with Turkish and UAE counterpart agencies. As of the date of this account, recovery status of those funds remained in active proceedings. Turkish authorities had placed a provisional freeze on the Karadeniz import-export accounts pending review of the MLAT request. UAE authorities had not yet acted on the Crescent Gulf Trade Services accounts. The $840,000 in unlogged cash recovered from the West Chicago Avenue exchange remained unattributed. The forensic accountants working the case had not been able to identify its source through the documentation available at the exchange or the financial records seized elsewhere. The confidential human source who went unreachable 36 hours before the raid had not been located. The task force's assessment was that the source had likely left the country voluntarily. The assessment was preliminary. The bridge, the Istanbul-based contact referenced in Nakai's operational ledger, remained unidentified and at large. One detail that stays with me in this case: the network raised $71 million in 11 weeks. That pace, roughly $900,000 per day, was only possible because thousands of individuals gave money in genuine good faith. They were not wealthy individuals gaming a tax structure. They were diaspora community members, many of them sending what amounted to significant personal sacrifices into what they believed was a legitimate vehicle for reconstruction contributions in a region they had family ties to. None of them were ever notified directly that the organizations they donated to were under federal investigation. The Justice Department's press release on June 28th identified the organizations by name. Most donors learned about it the same way everyone else did, through news coverage that appeared that afternoon. The 6 arrested individuals faced a combined charge sheet that included conspiracy to violate the International Emergency Economic Powers Act, money laundering conspiracy, wire fraud, and, in Harwick's case, unauthorized use of federal government access information and obstruction. Maximum exposure on the primary charges ran to 20 years per count. Prosecutors in the Northern District of Illinois and the District of Columbia were coordinating on the charging strategy given the multi-jurisdictional nature of the scheme. A question worth sitting with. Will the prosecution actually recover enough of the $56, $8 million to make the civil forfeiture proceedings meaningful? Comment why yes or no, because based on the MLAT track record in similar cases, the honest answer is far from certain. The network is dismantled. The accounting infrastructure that built it is in federal custody. The financial architecture that moved the money has been documented in granular detail in a case file that will be used as a template for investigating similar schemes in future diplomatic transition periods. And the $56, $8 million is somewhere between Istanbul and Dubai. And the bridge is somewhere that isn't the United States. And the regulatory gap that Daniel Harwick identified and monetized. The gap that sits at the intersection of diplomatic transition, application volume surges, and the institutional knowledge of former compliance officers, is not a gap that has been closed. OFAC reviewed its screening protocols in response to the Ston Bridge E findings. 2 additional mandatory cross-reference checks have been added to the application review process for organizations applying for licenses in newly authorized financial corridors. Those changes are now in effect. They will catch organizations that make the same specific mistakes this network made. If the question is whether they will catch an organization that has access to someone who knows exactly what the new checks look for, the honest answer from people inside the system is probably not. If you followed this channel for any amount of time, you know we don't do and justice prevailed. Subscribe so you don't miss what comes next in this series, because the Stone Bridge Network is one of at least 4 similar schemes that federal investigators were tracking in the same April to June 2026 window. We'll be covering the next one when the charging documents become available. The 8 nonprofits are dissolved. The servers are in evidence storage. The bank accounts are frozen. The demand that created the network, the money, the connections, the geopolitical window, that still exists. And somewhere, right now, someone is reading the Stone Bridge indictment the same way Harwick once read OFAC's procedural manuals, looking for the gaps.